A very important voice, good, influential market voice that is. Sumeet Nagar, Managing Director at Malabar Investments, joins in for an exclusive conversation with Nikunj. I hand it over to you there, Nikunj.
Well, it's an interesting time for mid-cap investors because you have a Nifty which is at an all-time high. Mega caps is where the market action seems to be. But when it comes to mid-cap and small-cap positioning, the words which financial media clearly is using are centered around meltdown, sell-off, rout, or a complete readjustment. So is this a good time to revisit good businesses? I will not like to classify them as small and mid-cap, or the tide currently is favoring large cap stocks looking at the bent of the economy. In any good market, there are bad stocks to sell. In any bad market, there are good businesses to buy. So that is going to be my theme of today's edition of Market Makers, with a perfect guest, someone who I've said that is one of the smartest mid-cap investors I've met. So Sumeet Nagar joins us. So good to have you back. Where were you hiding in all this market sell-off? My office has been trying to reach you, and
well, it's been a good environment to buy. You know, last year when the markets were just moving one way up, it's very difficult to go and find good opportunities in that environment. But in the last couple of quarters, when there's been a pressure on especially on the smaller mid caps, we're able to find opportunities to invest more. So we like environments like that.
So you're greedy right now. You don't think the tide has turned permanently in favor of large cap stocks?
No, there's nothing like a permanent shift, right? So I think if you're looking over very long terms, we always said that the market prices will respond to the fundamental improvement in companies, right? So let's say if you think about earnings as those fundamentals, if companies are able to grow their earnings, their market prices will sort of reflect that over the long term. And it's just that the valuation at which those earnings are valued, that changes from time to time, but that's noise, right? Over the very long term, if the company is able to grow its earnings, you should see that in the stock price. And so you can find companies like that, I think you're very good. And in current environments, if you're able to find them a slightly better valuation, so much the better.
In general, the view is that only a handful of small cap or small businesses, they become mid-cap businesses, and only a sliver of mid-cap businesses, they become large-cap businesses. So whereas the endeavor is to find the next multi-bagger, and everybody is trying to buy the next Bajaj Finance or a Chola Mandal, in general, do you think the environment is not conducive for some of the smaller businesses and medium-sized businesses, because interest rates are increasing, commodity prices are increasing, the trade war fear is now real fear?
Yeah, so I think the challenges are always there. Nobody would allow you to become big because everybody wants to take advantage of the market. Everybody wants to grow their business. So you have to have something unique, something differentiated about your business and the way that you work, whether it's through technology, whether it's through know-how, whether it's through scale, but something has got to be different about you and your offering. And only then can you sort of grow faster than the others. And then you need to be in businesses which allow that sort of scalability, right? So you want to find companies in markets that are growing, where there's a lot of room for those markets to grow. Because if you're going to be in a very, very small sort of market, you can be a profitable business, but you can never scale it up to become 10, 15, 100 times the size of your, where you are. And so if you find that scalable business and you find a great company within that, which is a differentiated offering, and those companies can actually compound for many years to come.
How many stocks have you added, or how many new businesses you've invested in this financial year?
See, we're long-term investors, so we don't churn our portfolio very much. So in most cases, we'll add to existing positions, but selectively we'll always look to find great ideas, and it's always with a view that you find a great idea that is better than what you have in the portfolio, then you make that switch. But you want to keep that concentration. So the one very sizable investment that we made over the last 1 year was in a technology company, right? For example, but we added to many of our existing portfolio companies where we thought that the valuations have become reasonable, and it provides a good sort of risk-reward trade-off.
So where exactly have you added, and which is this technology company you acquired?
Yes, it's a very interesting area. Like if you look at the developed markets like the US over the last decade or 2 decades, so much value creation has happened through technology or internet companies, right? So you have the likes of Google or Facebook or Amazon who've done tremendous value creation. even in developing countries, if you look at China, so you look at Alibaba, you look at Baidu, you look at Tencent, shareholders have done phenomenally well by investing in companies like that. Even in India, you've seen some value creation happening through private companies like Flipkart or Paytm. But unfortunately, the public market investors have been left high and dry. You haven't found any sort of great internet companies, e-commerce focused companies. But we know that there's a huge value migration that's going on, and it's going to happen for over the next 10, 20 years. And so we've always been looking for the right opportunity. And the challenge always has been that, even in private markets, you find companies that are growing, but they're not profitable. And there are few ones which are listed in public markets, they're profitable, they're not growing. And so we're lucky enough to find a company that sort of had both of those.
It's a listed company.
It's a private company today, but it's going to be listed fairly soon. It's called as Affle India. Affle is an AFFLE. And not many people know, but they are probably the largest mobile advertising company in India.
I didn't know about this.
Yeah, so people have heard of InMobi, for example,
Yes,
right?
yes.
InMobi has done very well, but a lot of their business is global. But within India, Affle is actually, has become the largest player.
Are they planning to go public soon?
Yeah, they should be going public over the next month, month and a half.
So
or
you have no plans to sell it when it goes public, because typically when we see pre-IPO placements, they happen. Anchor investors, they tend to sell out after the lock-in period.
Yeah, no, I don't think we have any such intention. I think this is it's a fantastic business and a fantastic company, right? So if you think about the world today and the way things are evolving, I'll refer actually to Warren Buffett's interview, I think just a few days ago, when somebody asked him about Apple and how they're sort of buying it more, and he said that an iPhone is still cheap at $1,000 for the value that it creates for people. And what he said is that the most valuable real estate in this world is actually on this phone, right? And because most people are going to be buying things over the phone, the value of being on that mobile phone is huge. And so as you look forward over the next 10 or 20 years, everybody would want their apps to be installed on the phone. And there's a huge gap between sort of advertising wanting their apps to be installed and consumers sort of acting on that. So Affle is one of those companies that has figured out the most optimum way to figure out who the likely users for the product that you have, and then what is the most cost-efficient way of targeting them. And they're able to do that, and as a result, they're quite profitable, and they're growing rapidly.
So what have you bought or added more from the public market?
So from the public markets, it's been many of the existing portfolio positions. So one of our largest adds was in Safari, something that I'd mentioned before. Luggage industry is doing very well. Within that, Safari is gaining share by virtue of being third largest player, but sort of increasing its market share over the years. And with increasing size come operating leverage, and so they're benefiting from all of those trends, right? So that's been one of our additions. We had added to the professional staffing companies that we had mentioned.
Are they expensive? Are they Quest or the others?
Yeah, so I think they had become quite expensive in between, but over the last few months, they've also come under pressure, and they've become to reasonable levels. Even again, they're expensive if you just look at trailing numbers, but if you see the level of growth and that scalability, right? These companies can easily become 10 times, 15 times, 20 times the size of where they are today. So I think given that potential, they're still fairly small.
The macro regime has changed. Crude at $75, $80, or in between $75 and $80. Rupee definitely is sub 70 now. Is that changing you? Is that forcing you to think or invest the way you've not done in the past?
See, I mean, as you know, we're long-term, bottom-up investors, right? So we look for great businesses.
When they change, businesses will change also.
Yeah, so I think what you see, the environment is important, to understand what sort of stance you want to take, right? So in sort of cricket parlance, whether you want to be front foot or back foot, right? So you look at the pitch, you look at the conditions, and so in the current environment, I think you're better off being slightly on the back foot. You want to make sure that the companies that you're looking at, they don't have exposure to these macro negatives, whether it's interest rates or commodities or the currency, or if they have strong pricing power to be able to pass that on, right? So So you're looking, you want to be doubly sure of that, right? So again, that's why I say, you want to be a little bit on the back foot, be circumspect of that investment thesis that you're thinking about, and make sure these companies can navigate through this time. So, on the one hand, you have these macro negatives. You obviously have the elections coming up. But on the positive side, you're seeing that the global economy is still growing fairly well. Indian economy, after the twin shocks of last year, is sort of chugging along now very well. Is picking up steam. And once the election sort of uncertainty is over, it can continue along that path, right? So I think it's a good balanced situation, right?
Are you fully invested in the funds which you manage, or are you sitting on cash which is higher than the average?
No, we're actually slightly below average, right? Okay. So I think last year, towards the end of last year, our cash levels were higher, but in the last 2 quarters, as we've seen prices come down, we've been able to deploy some of that, right? So I think it's also taking advantage of those opportunities. I think many of the challenges that you see are more shorter term in nature. From a longer term perspective, if you're able to find great companies at good prices, you want to add them.
The regime for interest rate is also changing, and some would argue that if the cost of wholesale borrowing will go higher, that could have impact on demand, interest rates, and life for NBFCs would change. NBFCs had a great run because interest rates kept on coming down, PSU banks never had money to lend, NBFCs got the market share. The reason why I'm asking you this macro dominated question is because it brings me to micro, and the micro part is that you own Chola. Can the change in interest rate re-force you to think your thesis in Chola?
So I'll answer that for NBFCs in general, and I'll talk specifically about Chola, right? So NBFCs in general, I think when you had this rising tide of declining interest rates, I think many of them, did very well. There was probably not much differentiation in terms of quality. But when you have a reverse environment, when interest rates are rising, I think quality will start to matter a lot more. So I think you'll see much more dispersion sort of coming through. And so, I think we're likely to see that going forward. So the companies that have that strong pricing power to be able to pass on any sort of increases that come in, are the ones that would do very well. I think Chola as a business is fairly good. I think part of our thesis on Chola was also the leadership of Reliant, and with that changing, I think the thesis sort of changes a bit, right? So I think at the leadership front, there's still lack of clarity there, but as a business, I think it's still pretty good.
You still own Chola?
We had reduced our position in Chola partly because of the leadership changes, and partly because I think a strong run up that we had seen towards the end of last year. But I think as a business, there's still it's still pretty good.
When we speak of iShare, I always say this big no. I mean, Siddharth Lal is a great guy, but my personal view on iShare has been that it's an expensive franchise and where numbers may slow down. You always said a big yes. Now let's look at the numbers. The slowdown for iShare is visible because the base effect has kicked in. But the stock has come down from 35,000 to 27, 28,000.
Yep.
What are your thoughts on iShare? Do you still own it?
Yeah, we still own iShare. We haven't added much to it, but we still own it. So I think the challenges are there. The growth has obviously come off. Obviously the kind of growth that they were seeing in the past, it's tough to do that on a high enough pace. But they still have many drivers in place that haven't come through yet, right? So, I mean, how many, if you turn on the TV, you see ads from every single two-wheeler company that you can think of, but you never see a single ad by iShare or Royal Enfield, right? So they haven't pushed on that lever at all, right? And part of it is that I think the capacity side also they were a little bit constrained. So once that lifts up, maybe they will have the ability to, sell more and maybe advertise more. This year they have one of the, biggest changes in terms of new products that's coming through. If you think about the twin engine technology, I mean, it's a fundamental shift,
platform,
right? So it's a huge platform, and more than the platform, I mean, twin engine is very different from a single engine. So, for a mechanical engineering geek, you get that, right? So, it's a pretty fundamental shift that they've made. And I think it provides them a platform with which they can succeed in the global markets. Whether they can or not, I think the time will show, but I think they've done all the right things to put themselves in the right position to succeed, right?
So you are in no hurry to sell iShare, but you are in no urgency to also buy iShare. Can I put it this way?
Yeah, so at this stage, I think it's fairly balanced. It still provides the upside if if they add on capacity and the volume growth sort of picks up again. Same time, if the new models do well. With the new models here, you don't need to generate much of volume growth to still do fairly high sales growth, because these models are going to be at 1.5 to 2x the price point, right? And especially in the exports market, they'll be probably at 3x the price point, right? So even with fairly modest volume growth, you can generate fairly good sales growth, and with profitable products, bottom line can grow faster. So I think at this stage, it still provides good upside. But if the market becomes jittery about their prospect and we find attractive opportunity, we'll add more.
Can I say the unique bit about Malabar Investments is that you are not the theme-oriented guy. You are more like a bottoms-up guy. Because if I look at your top 8, 10, 11 holdings, there is no common thread in them. iShares is an auto company. Chola essentially is a NBFC. I can throw in a technology company like Affle, which you've acquired. Safari is a complete play on consumer durables. You've got a Repro, Avanti Feeds. My God, they are not connected. That's the bottom line.
So I think the common theme, if you were to find, it would be that each of these businesses are truly differentiated in what they do. So in the niche within which they operate.
Is that a conscious diversification or just happened?
No, it's a bottom-up approach. So we're looking to find the best players in each field, right? And so we don't want to have too many players in the same area. So why not just sort of find the best one and invest more in that? And so we're looking for companies that are very differentiated, have terrific management teams at the helm, and where we see long enough runway for growth. So that's a common theme across all of these guys.
Which stocks, to your mind, are nearing the expiry age now? Businesses may not be nearing the expiry age, but which stocks, to your mind, in your portfolio now are in their last lap, or maybe the second last lap now for purely an investor?
I think it's tough to say. I don't think our portfolio is all sort of small and mid cap.
Even Avanti?
So these,
you think it's not in the second last lap?
Avanti is at a cyclical downturn, right?
Okay.
So Avanti, as a business, still has a runway to grow, right? On the feed side, maybe the growth comes off, but on the processing side, they have a long runway to still grow. I think the challenge with Avanti was that as the margin expanded over the last year, on peak margins, people are willing to sort of give it peak multiples, and that's one of the reasons why we very reluctantly ended up selling that position, even though we have a lot of faith in the management and the way they've run the business, and will likely continue to run this business.
So you're of Avanti as a
All right, Sumeet Nagar there talking about his portfolio additions and deletions, and really talking about the market climate at this juncture as he views it.